Is Baidu a cheap growth stock? Today, we're going to have this discussion on it. Baidu actually did a secondary listing in Hong Kong very recently in March 23rd, 2021, and that actually raised $3.1 billion to the company itself. However, unlike many tech firms which saw a spike after IPO, Baidu's IPO actually flopped quite badly. As you can see from the header over there, it's the first tech firm to make a flat debut on Hong Kong Stock Exchange, as investors spurn the pivot by China's dominant search engine towards artificial intelligence. This portion is very important. They're actually pivoting towards artificial intelligence. Today in this discussion, we're going to have a few points covered. The first, Baidu is actually China's Google. I'll share a bit more with you, and once you understand it, you kind of know what they have been doing along these years. Secondly, I'll share with you where exactly is growth coming from. And thirdly, I'll also be touching on this specific part, artificial intelligence. So if this topic interests you, continue watching on. Hi guys, welcome back. Baidu is actually founded by Robin Li and Hong. In many ways, they have similarities to Google. Maybe they're even mirroring Google's growth. So let's discuss a bit further. To share with you, Baidu is actually China's dominant search engine. But if you think dominant search engine, is it very profitable? I'll pull out quick numbers for you to see. This is actually from its IPO prospectus. If you want to find out of a company, one quick tip is always dig through the prospectus of an IPO, because within it, they have a lot of data. And what I can present to you over here is the online marketing services, which is, ad revenue from search engine. It's actually been declining across the years. 2018, it was 72 billion RMB. 2019, only 70 billion RMB. And in 2020, it's dropped to 66 billion RMB. This seems to be a decaying cash cow in a lot of ways. And the curious question is, how come search engine Google is doing so well from ad revenue? They are dominant in US, they are dominant in Europe, they're probably dominant in many English-speaking nations. But Baidu's revenues are not doing well from search engine. And one key understanding that you must know from this tutorial is Baidu is actually in China, where super apps dominate things. If you go use Alipay, use WeChat, you realize that these are super apps. When I went to Hangzhou myself, I used Meituan's app to find restaurants and get deliveries. And it's so complicated. I don't know if you've lived in China or not. If you do, you kind of know what I'm saying. So using the apps in a little bit of while I can share with you, it's very complex, but it has everything inside it. What that means is that search engine revenue is diluted away. There's competition from Alibaba, there's competition from Tencent to actually get over this advertising budget. And these are some screenshots that will show you what exactly looks like in a Chinese super app. There's entertainment, there is news, there's so many things within it, and they all want your attention kept within that app itself. So just to recap again, Baidu is no longer the largest recipient of ads in China. Its share has been falling dramatically across the years. Right now, Alibaba is the biggest digital advertising ads, 37%. There's even ByteDance now, which owns TikTok. So there's so many competition platforms to take away ad revenue. So even though they are dominant for search engine, it does not translate to ad revenue. So where is growth coming from? Possibly one place to look at is actually the cloud services. As you can see highlighted now in green, cloud services has been growing exponentially. If you see in 2018, it was 3 billion RMB, 2019, 6.3 billion RMB, in 2020, 9.1 billion RMB. So cloud services definitely is on the uptrend. Google also have their cloud services if you realize things. And if you have followed this channel, in the previous tutorial, Alibaba, I've actually mentioned that they are the dominant cloud services provider. So cloud computing, cloud services is big in China, is growing. So at least there's some salvation from this segment. And if we piece them together, you would see that together they combine for Baidu's core, which is the dark blue bar over there. You realize that 2018, 2019, 2020, the core has been relatively flat. The advertising revenue has dropped, but the cloud computing revenue has grown, so kind of compensated it. But hey, do you realize there's a light blue bar? iQiyi, actually in Chinese is iQiyi. And iQiyi, if you don't really know, is actually China's answer to YouTube. You are viewing this right now probably in YouTube. And if you see my channel, this is how the YouTube interface works. The equivalent in YouTube is iQiyi. But unlike YouTube, iQiyi seems to be floundering a bit in its performance. If you look at the share price over here, it's actually listed also. You realize that it's been sideways for quite a long while. In fact, it's actually dropped significantly after the IPO done for Baidu in Hong Kong. So now look in terms of profitability, where do things exactly stand? I've actually compiled this, for you in the screenshot. You realize that over here, Baidu's core has been doing profits for the business itself. It's been delivering, as of 2020, close to 20 billion renminbi, a very steady cash cow. However, iQiyi is losing money. The revenue is 29 billion renminbi. The expenses are 35 billion. They are losing 6 billion renminbi. Now, this comes to the next portion. How to exactly value Baidu? Is Baidu as a chip? I'd like to quickly answer that for you. If we look as the core component as a cash cow, money comes in, it's still going to be there for a while, although it's decaying slightly, compensated by cloud. And that brings in 20 billion renminbi. In US dollar, that's about 3 billion US dollar. And if you think about it, hey, this cash cow is pretty stable. You want to add a multiple to it. If you add a forward earning of 20 times PE ratio, that means you can value this core segment at about 20 times 6 billion US dollar, 60 billion US dollar. That's a simple way to look at things. Maybe the core is going to be there for a while. It is actually worth $60 billion. Then, if you don't even factor in the value of iQiyi, even though it's losing money, but it's still a certain value. The next portion to add on things is Baidu actually has net cash. They are a tech firm, but unlike most tech firms which are spending money and don't have a lot of cash revenue behind, they are actually net cash over all these years of earning revenue. So they actually have a net cash of 77 billion renminbi, which is about 12 billion US dollar. Now, if we add 60 billion, which is the core, worth 12 billion in cash, that means the firm could be already worth $72 billion US in market cap. If you look at charts today, that's about 72 billion. But again, that's a simplistic way to look at things. And if you believe in that, maybe Baidu is not expensive. I think that's something that we can quickly ascertain. As to whether it's cheap, as to whether it's high growth, that's the next segment of things. Now in this chapter, let's talk about why Baidu is potentially high growth. I know it's taken our team many hours to look through all these material for you, so do press on thumbs up so more people can see valuable content like this also. So when it comes to understanding Baidu, this summary table really explains things very well. You realize that they have the core business, which is mobile ecosystem. They have a lot of things inside. Entertainment, maps, Baidu Maps is big, Baidu search engine is big, and they also have the cloud portion. But what I want to draw your attention is the right hand side, intelligent driving and OGI, other growth initiatives. Intelligent driving, this is a big portion. And just now I mentioned that Baidu is actually mirroring Google in a lot of ways. What does Google have also? They have Waymo, which is an automated driving service. So Baidu again kind of copied that in my opinion. But Baidu has actually started developing things very early. If you look at Wikipedia, you realize that in 2013, they've actually commenced movements towards building autonomous driverless vehicles. And that is actually 8 years ago as of this time of filming, which means they've actually made this long-term target crystallized bit by bit. So it's very good execution in my opinion. And as of right now, this 8 years of hard work has led to this. Let me draw your attention to this portion. Apollo, which is the autonomous vehicle segment of things for Baidu, is the market leader in China with 4.3 million accumulated test miles and 199 autonomous driving licenses across China. If you read further, you realize that the second player only has about 20 licenses, which means they have actually a very substantial lead. This could possibly be a moat. This is something Tesla is known for, but for China, Baidu seems to have that lead and they have it locked in. So using this lead, they've actually done quite a few initiatives. They've launched autonomous driving platforms in Guangzhou, deploying robo-taxis, pickup stations, and they've actually done a 5G smart intelligent driving project in Chengdu. So they're actually leading a lot of things. And another further table that I'd like to share with you is to let you understand the competition landscape in China. And what you can see over here, this summary table is the number of firms being involved in autonomous driving vehicles. 2016, there was about 2,000 vehicles, but right now, it's more than 5,000 companies involved in autonomous driving. And Baidu is the number one of them. So again, being number one of more than 5,000, that means you've done something right, correct? That means you have certain value. That means you have certain edge. And if you can compound that, you have an unassailable lead. That is why ARK Invest CEO Cathie Wood is bullish about Baidu. She's mentioned that Baidu is probably China's most promising EV company, and that she has actually invested into Baidu for the ETF itself. Now, Baidu has actually launched more things on autonomous, which is buses. So let me show you a picture of how their autonomous bus Apollo actually works. And this bus is not only going to be in China, they've actually tied up things ready with SoftBank Group to bring, through their subsidiary SB Drive, this bus into Japan. So they are not only going to dominate China, they could possibly move it across Asia. So that's a big growth initiative. So Baidu is good not only for the autonomous driving, they have also a lot of smart initiatives. This portion requires a lot of data, this portion requires a lot of real-time information, something that China is good at. 5G is where China could possibly pull ahead of many countries. And that leads to the next point, which is on AI chips, because to do autonomous, you need a lot of robotics. And that segment requires a lot of high-end computing, requires a network of 5G, and that's why we move on to the next section, which is Kunlun AI chip that is a key for Baidu. Now in this segment, let's talk about Kunlun AI chips. And if you're interested in Baidu, this is a segment to look out for. Now, you and I, we are all laymen, we are not scientists understanding artificial intelligence. But from a layman perspective, we can kind of guess already. The more sophisticated, the more complex this chip is, the better the results, the faster the results that the artificial intelligence can use, correct? It's like a brain, it's like our brain. The faster the better the results it is. So if you look around forums within the industry, you realize that Baidu's Kunlun chips are mentioned very highly. Many in the sector reckon that it's probably the best. And that is why they are mass producing this right now. This chip is not only used for the autonomous vehicle. This chip can be used across many industries. That's why mass production is taking place. And that's where they're actually raising monies from. And that's a segment I'll touch on in a while. But let me play on this clip by Robin Li, who is the CEO of Baidu, to help you understand a bit better on the AI chips.
Can you specify which sectors you expect to see most demand from? It crosses many industries because AI can help in a lot of scenarios, in a lot of cases. And wherever you need high-end chips, be it a data center or edge computing for smart transportation, for energy sector, for education, or for finance, they all need this kind of high-end chips to do complicated AI.
Now, this Kunlun AI chip unit is already valued at $2 billion. There's market speculation that it could potentially list itself also. And if we really believe that many industries will adopt this AI chip, wouldn't the value of this unit grow eventually? Quite likely so, right? So this leads on to the next part with so many positive factors which I mentioned. Firstly, if you value the cash cow, which is the core business, already at $60 billion US dollars. They have cash of $12 billion US. They have a fast-growing autonomous vehicle, they have a fast-growing Kunlun unit. Why exactly is Baidu still looking so cheap? This article by Motley Fool, it shows that Baidu fell 23.3% in March, and quite a bit can be attributed to sentiment in technology and also the ongoing risk of delisting from Nasdaq that US government is putting pressure on. It's not only US government, Chinese government itself is also putting pressure on tech firms. Alibaba, if you have seen news, has been fined billions of dollars. Luckily, it's been resolved. Maybe that it will raise certain sentiments in tech firms over their monopolistic practices. And this third part relates to the firm Archegos, which is right now in the limelight for having a lot of margin positions in Chinese tech firms and has seen a massive decline. And they've been selling out positions, putting pressure on prices. Now, this article has also mentioned pessimistically about the self-driving business being very cash draining and the electric vehicle market being very challenging. Now, what are your thoughts? Leave in the comment sections. I'll be keen to hear from you also. And as always, if you haven't subscribed, press on subscribe. In the coming weeks, I'll be reviewing even more Chinese firms to help you keep up to date with Chinese technology. Now, if you are keen to invest in Baidu, you need not always buy the stock. I'm a big advocate of being diversified. Simplify your investing, buy broad-based. And if you're keen in Baidu, you can always look out for a fund that is particularly invested big into Baidu, and that is actually the CQQQ. This fund has actually been featured in a previous video I've done, which is how you can invest in the Chinese equities. And if you haven't seen it, inviting you there, that gives you another big perspective on how you can invest into China successfully. So with that, I'll sign off from here and see you in that video.